It has been a while since I did my last podcast. I was on a streak of silver to the moon, gold to the moon, and the weight of evidence was there. We were aligning. The bull trend was really set. We're building a good technicals, and then we were always, when you're in a bull trend, then you look for upwards target, right? But what happens after a while is if those bullish technicals, some of them get breaking down, you start breaking down below moving averages, below resist support, then the landscape changes, the weight of evidence changes, and you kind of get either triggered out, and then you have to take a step back and then re-see when the dust settles where you're set up. So I let some time pass by and really tried to absorb what's been happening with the current meltdown in the U.S. equities, major sell-off in the precious metals, because we were very close right before we had the meltdown, the reversal in the PM sectors. We didn't have the quarterly close, so the March close at the beginning of the month. All the indications, gold was really beating the SPX. We're above important breakout lines, support lines at 1600 gold above. Everything was looking pretty sweet, but that's not what happened. Everything, a lot of technicals got broken down, and now it's to see what's up, guys. So on Gold Tent, I did this post with where I did a whole recap of for silver, a lot of charts, and I'm going to go through all of them in this podcast, and then we'll see with the weight of evidence where silver is right now. PMF chart. That's pretty much the first one. If you want to reduce noise, weekly PMF chart with the average true range set at 14. Just to take a step back and say, okay, how much damage was done price action wise, remove the noise of the time. And when I took a look at this picture, what I saw is same type of formation that we had in the pre-2001 bull setup. So after this, the bubble deflated, the 1970s bubble in silver. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5, 6. Price action starting to get low. So this is really, really borderline from breaking down. But the setup, the consolidation, the tightness of the range, really setting up as we had 2000 pre-bull, and the immediate target was reaching in one straight line, reaching previous highs here about $15, and the equivalent for silver would be reaching about here this $23, which is kind of what we've been setting for silver, right? A while back. We want to break above 1850, and then the target was 21, 22, that range area. So the PMF chart for me right now, it's really at the bottom. Higher lows, those two setup formations, higher lows, straight line. If it could really hold here, then for me, I think we can have a strong reversal to upwards and then continue that bull trend that we had for silver. All right, another view to see the health of the silver market, and I'm always going to try to compare to previous meltdowns or previous setups. This is the premium discount, or some people call it contango backwardation. So it's the difference between the next current contract for silver, the current contract for silver, and the next current contract for silver. And the premium or discount you have to pay right here, 98, you had a discount, so you were actually paying less for the current contract versus the next one. And when you have a premium, usually it's when you're in uptrend and people are, I'm not quite sure the exact reasons, maybe it's inventory of silver, physical silver, but there's kind of a outbidding. Always you have to pay a little bit more for the current contract because they think that the price of silver is going to keep going up. Well, in 2008, look at that nice run up, sharp decline. And it went down to 0.38, and then we had another week where it was 0.1, so 1 penny premium to buy those silver contracts, the current silver contract over the next one. And right now, sharp decline. We had the same thing, strong sell-off. The price action didn't go as deep, but we're at only 3 pennies, 3.4 pennies extra for the next contract. You'll see as I move on this podcast, this is just the beginning. You kind of, I want to pull the trigger and buy silver now. There could still be some a spike down, and if ever we get contango went very low to that range, paying one penny extra for that next contract, that could be a sign that nobody wants silver anymore. People giving up on that, and that's very contrarian. A lot of trading frameworks, you have to buy on breakouts, and you're already up here. When you buy on breakouts, you've already had a strong move up, price action has moved up, and then you're buying, you knowing that you could have a pullback eventually. But what's happening now for silver, there's no breakout. We're really at the dirt bottom or close to the bottom, and this is seeing the weight of evidence if we could pick that bottom, which is some crazy things to do, which we shouldn't be doing. But if you want to know if you could start entering slowly, because now we're going to try to do a weight of evidence on that buying cheap relative to where it could it go lower, just to see if there's a turnaround point. You don't want to be catching 100% falling knife, but just to see if you're in an area where the risk is lowered and get one of the craziest entry points you're probably ever going to get. 2008 after sell-off, look at that move up. And after that, it started building up. Every time that we had a decline in premium, there was a strong move up. Look at that in the 1980s, 70s. Insane premium, 30 cents, even more. I zoomed out. So right now, this is what it looks like on the contango backwardation analysis. Here's another view. Always trying to use different views. Here's like a measure move or a mirror image. Oh, exaggerate to the upside. Down you go to the lower side. 2008, pretty much the same. Didn't quite go as low, but it gives you a ballpark of the exaggeration in one direction, how much exaggeration could get in the other direction. Here's a distance from that 12-month moving average. Oh, getting far away. Pay the price. Measure move down here. Here, probably people say, oh, it's the end of the world, silver. No. Revert back to mean, and this is probably one of the best, craziest entry points that you could ever have for silver. After that crazy run, the weight of evidence, the money printing, all that, it's still valid, even more today with all the trillions they're going to be printing, the easing fiscal stimulus, eventual inflation after this deflation bust is complete. So this is what I'm aiming for, this type of entry right here. You don't want to get in too early. Could always have a crazy spike down. So you want to gather the evidence. Here's my mirrored image. Same thing. All that top. Oh, projected to the bottom. Coinciding monthly defined support. So that brings me about to the $13, $13.50 range. Moving average distance, same thing. Oh, try to go to the moon. Swing down. And see, we're not quite there yet. So we're going to have to wait to the end of the month. I know people, FOMC meeting, I might go to the moon. Honestly, patience now is going to be your best reward. And maybe at the end of the podcast, I'm going to tell you there could be some opportunities to play some very low buy stops. And if you don't want to get it, if there's a spike during the month, before the end of the month, if ever it happens, you could probably get a super duper low entry there, even below these levels right here. All right. Weight of evidence. Okay, these ratios, gold to SPX ratio, silver to SPX ratio, to try to measure the influx of money. So if gold is outperforming the SPX, more money is going in gold than in the US equities. I used to draw my breakout line a little lower, very tight, very close to the 12-month moving average, or this is a 3-year moving average on quarterly candles. Not letting really the momentum pick up. So sometimes I look at a chart and then, what if I look at it this way, and which makes more sense. So right now, higher lows. My line I put a little higher on higher defined quarterly chart. And what that happens is it lets the price action stay above the 3-year moving average and really give it incline and really make sure that it's not a false break upwards, that you really got that 3-year moving average behind you. Same thing for silver, marinating below. Right here you see gold outperforming SPX, but barely, but staying above the early signs that it's gold's time to shine. Silver below, still lagging. Gold was very high this quarter, but getting sunk, so it could probably close maybe very close to that, just above the 3-year moving average. And silver right below right here. So similar type of setup, still declining 3-year moving average. That's how early we are in this precious metals bull run. The meltdown in the 2020 that we're living right now, the injection of stimulus, just like going out of 2008, all that QE. We'd have to let it time for this to marinate. To eventually, we'll see if gold can close above this quarterly defined breakout line versus the SPX. Then you'll really be above, a few quarters above that inclining 3-year moving average. You're gonna have a lot of pressure, and there'll be no doubt that silver will follow suit. It's just so early for silver. I might have jumped the gun. We had a lot of bullish technicals for the past months, and we really wanted silver to join the party. But time, you can't control that. So you have to let the chart morphs. Everything has to play out the way it does. And after that, when the dust settles, then you get a clear picture. All right. Gold-silver ratio, quarterly candles, huge bottom, measure move, 122. But there's important resistance right here, and we're blasting through it. But that's quarterly defined resistance, which is going to end at the end of the month. I don't know if this can close below, but if ever, for the next 2 weeks after FOMC meeting, silver could start outperforming gold and create a wick like this right below that neckline. There'd be reason to believe that we're not going to reach that target, or we're at least going to get a pullback to that 3-year moving average, and then we'll see from there. But right now, this could be noise above that breakout line. We're extended from that 3-year moving average. And look at 2008. You see that during the meltdown, up, and then no, the QE, whatever came in, and then silver started outperforming gold all the way to those 2011 highs. This could still be noise. Quarterly candles, guys, reduce noise. All right, another view, guys. Volume analysis. Negative volume analysis is smart money buys or sells on low volume days, decreasing volume days. Positive volume is the crowd. When the price action moves on increasing volume days, that's a crowd getting in. Oh, fear of missing out. I want in. Lots of buying. So the smart money is considered the ones that are buying or selling on low volume days to scale in slowly, not move the price too much, get really what they want. So here you see, even in 2008 meltdown, even the smart money, they dipped below that their 1-year moving average, and that's bearish, but not very long, and they got right back in way before the crowd money got back in. Same thing here. We're dipping below the 1-year moving average, and hopefully we're not going to stay too long. And once that climbs back above, and the crowd money right now starting to dip, so that's giving me some indication that maybe we're not quite at the bottom yet. In 2008, it dragged on a lot more, but what I've noticed is the moves, they're faster and faster. 2008 also hit that support right here, previous resistance turned support. That was also a good indication that to put a buy stop here to get the bottom. For 2020, we don't quite have that. We haven't had lows. We don't have those previous breakout levels turn support. They're not quite there. So we just have natural support right here. So that's another area right here. We see not quite there yet. So getting that 1350 or spike below that is still in the cards, guys. But we're closing in on that great entry. And what about commitment of traders, guys? But you got to remember, commitment traders is the previous week of data, Monday, Tuesday. So we don't have Wednesday, Thursday, Friday. And there was a lot of big sell-offs in the commitment of traders on the end of the week for silver. Here's the open interest shrinking. People, a lot of selling. You see the net positions, they're starting to get close together. When they get really close together, they show possible bottom. Even here, the net small speculators dropping their positions. Right here, closing in also. And the COD index, look at that. Now we're in oversold area. So this could stay for a little while. And once COD's going back down, price action should go back up. So what I see here is all that open interest unwinding, giving room for further growth going to upwards. Especially these positions here getting closer could signal bottom areas. So if I would consider, I can't wait for next week's data, Wednesday, Thursday, Friday selling. This could actually be a lot closer than it is here, maybe halfway. So we might have another week or two. It's going to coincide perfectly with the end of the month, the end of the quarter. And then we have a clearer conscience of a great weight of evidence to enter this silver once again, guys. So I put out a poll on Twitter this morning. What do you think where the bottom's going to be? And just I want to get a feel of the crowd. I put $15, $10, $5. A lot of 15, 10. And it kind of fits where we're at that range of $12 to $15, $13. It always overextends what we could think. So having another sell-off really that's going to go hit those $12, $13, $14 areas is a strong possibility. If you want to take an early position, maybe in silver, you could put in a sell stop or buy order really low, maybe at $10 if ever it gets hit before the end of the month. But I think there's multiple strategies for people how they want to enter those bottoms. I'm not 100% used to doing that. I like playing breakouts and pull back to breakout lines, and this is the complete inverse. This is catching a falling knife. It's all these things that you shouldn't be doing. But if you're able to buy cheap relatively to what silver, where it should be, this could be an opportunity, guys. So I'm looking at that. In hindsight, I want to make sure that that catching that 2008 low, I did everything possible with my weight of evidence to see if this is another 2008 low type scenario where I could say, oh, it would have been great to enter there, but trying to do it in an intelligent way, guys. So we're going to keep an eye on it. End of the month, for sure, we're going to have more clarifications on exactly where the market wants the precious metal sectors to go. But until then, it's going to be a wild ride, guys. So enjoy the insanity that we're living right now. Okay, thanks for watching, guys. And don't forget to subscribe or like. I appreciate it. Ciao, guys.